Hello, my fellow degens and hodlers. It's your boy PB, back for another PhatBear Alpha episode this Monday of week 18. Let's kick things off with the orange coin. Bitcoin is ranging around 95.5K. It's teasing us, folks, dangling that 100K dream just out of reach, like a carrot on a stick for us weary bulls. The total market cap is at 2.99 trillion, up a modest 1.7%. Now, the 24-hour trading volume is where things get spicy, 76.6 billion, up a juicy 30%. Bitcoin dominance is holding strong at 63.3%. And finally, the fear and greed index is chilling at 51, which is basically the market equivalent of a shrug emoji. For alt performance, the winners are Pudgy Penguins, Deepbook, Bonk, and Virtuous Protocol. The losers are just Token, Initia, Alpaca Finance, and Dark Eclipse. Let's zoom out and talk about China's latest move, or lack thereof, in this spicy U.S. trade war. China's decided to play it cool, holding off on new stimulus despite the U.S. slapping triple-digit tariffs on their goods. The Politburo met last Friday and said, "Nah, we're good on stimulus," opting to support affected firms and workers without cracking open the fiscal piggy bank. Investors, predictably, threw a tantrum. Chinese real estate stocks tanked 3% Monday because apparently they were expecting Beijing to eat trillions of yuan into the economy. Spoiler, it didn't happen. China's betting on outlasting the U.S. in this trade war game of chicken. The chief China economist, Ting Lu, says dropping a big stimulus now would be like Beijing admitting they're sweating. Instead, they're projecting calm and prepared vibes, hoping Trump's administration blinks first. Analysts reckon China needs 1 to 2 trillion yuan in fresh stimulus to keep growth from dipping below 4%. But they're holding off, probably because they don't want to look desperate. I get it. Nothing screams I'm fine like refusing to buy economic band-aids. For our crypto news, let's start with a heist so big it makes Ocean's 11 look like a small robbery. On-chain sleuth Zach XBT, the Sherlock Holmes of blockchain, flagged a massive theft of 3,520 BTC, worth a cool $330.7 million. That got yanked from a compromised wallet. The hacker, moving faster than a scalper bot on a Binance dip, laundered the loot through 6+ instant exchanges and swapped it for Monero, the privacy coin that's basically the crypto equivalent of a burner phone. Because Monero's got thinner liquidity than a 2017 altcoin, this flood of BTC to XMR trade sent XMR's price spiking 50%. It went down afterwards, but still up 25% in 24 hours. Now, let's talk about why this matters. Monero's whole deal is shielding transactions, making it the go-to for anyone who doesn't want their moves traced. Think darknet markets or mega hacker. This heist's so big it's got people whispering about privacy coins making a comeback, especially since XMR has been delisted from exchanges like Kraken and OKX for being too sneaky for regulators. Meanwhile, Chainalysis, the blockchain snitch firm, chimed in, saying most criminal transactions still use mainstream coins like BTC. Privacy coins like XMR are a pain because of their low liquidity and exchange bans. Next story. So, the word on the blockchain is that Sam Altman, the OpenAI mastermind who's apparently moonlighting as a crypto visionary, is gearing up to launch a social platform that uses WorldCoin's WLD token as its lifeblood. People are claiming it will be unveiled at Altman's at last summit on April 30th. The pitch? A social network where World ID, WorldCoin's iris scanning proof of personhood gimmick, keeps the bots and deepfakes at bay, and WLD is the gas for transactions and governance. Think X, but instead of blue checks, you get a creepy eyeball scan and some tokens. Here's the deal. WorldCoin, rebranded as World Network last October, is Altman's pet project to verify humans online using iris scanning orbs. It's got a noble-ish mission: fight AI bots, enable universal basic income, but it's been drowning in controversy since its 2023 launch. Privacy regulators in places like Kenya, Spain, and Hong Kong have slapped it with bans or probes, screaming about biometric data misuse. Regulators are warning that users are basically selling their biometrics for WLD tokens, and they're not wrong. Last crypto story. BeraChain made waves with their Boyco program, a pre-launch liquidity platform that sucked in a jaw-dropping $3.1 billion in pre-deposits before their mainnet went live on February 6. Boyco, built with Royco, Enso, and Layer 0, let users deposit assets like USDC, WETH, and WBTC into vaults on Ethereum, which were then bridged to BeraChain's mainnet to juice up dApps from day one. In return, depositors were promised 2% of the Bera total supply. Well, the big day is coming. Those tokens are unlocking on May 6 for folks in the 90-day Boyco markets. Boyco was a smash hit, with over 100 markets letting users deposit single-sided or paired assets to back projects like Kodiak, Dolomite, and EtherFi. The BeraChain Foundation hyped it as a way to solve the cold start problem for dApps, and it worked. TVL soared from $2 to $3.5 billion, making BeraChain the 8th biggest chain by TVL at launch. The catch? Those 10 million Bera tokens are dropping in a lump sum to Boyco depositors. When 2% of a token supply hits wallets, whales start circling. This unlock could shake things up, especially since Bera is down more than 75% from its all-time high. Now, we're diving headfirst into the DeFi jungle with some fresh news. Aave, the lending protocol that's the equivalent of a liquidity fortress, dropped what some are calling the most important proposal in its history back in March 2025. The Aave-chan initiative, led by Mark Zeller, unveiled a tokenomics overhaul. The big news? They're introducing a new non-transferable ERC20 token called Anti-GHO, which is like the rebellious cousin of Aave's Go stablecoin. This bad boy is designed for Aave's stake curves, letting them sip on a slice of the protocol's revenue. Anti-GHO replaces the old Go discount system, redistributing revenue directly to stake curves. It's part of a broader Aavonomics update that also includes a buyback program. Aave's DAO is scooping up $1 million worth of Aave tokens weekly for 6 months to stabilize the price and make token holders feel like they're not just bag holding a governance meme. And they've got a new umbrella safety module to protect against bad debt, promising to save you from a bank run like Terra Luna. The DAO's reserves are up 115% since August 2024, so they've got the cash to flex on this. Next story. EtherFi, the Ethereum liquid re-staking protocol, announced plans to transform into a DeFi neobank with a full suite of financial services. They're aiming for $1 billion in revenue with 30% margins, all while staying fully on-chain. The plan? A mobile app that lets you pay bills, receive fiat salaries, and use crypto assets in DeFi, plus debit cards for U.S. users to spend their gains at Starbucks without selling their ETH. And they're doubling down on their re-staking product, letting users stake ETH, BTC, and stablecoins for yields while waving around liquid staking tokens to play in the DeFi sandbox. EtherFi's already got serious industry cred. They've racked up over $7 billion in total value locked since launching. And CEO Mike Siligadz claims they've been profitable since almost day one. That's rarer in crypto than a project without a 90% token unlock for VCs. They're building on their re-staking tech, which lets users stake ETH and get ETH to use in protocols like Pendle or Balancer, while also integrating with 30-plus DeFi platforms. They're hyping this as a banking experience we've never seen before, with non-custodial wallets and staking perks that could make your grandma ditch your savings account. Last DeFi story. Infinex announced that their Bullrun game, a crypto trading card showdown, now requires players to hold $250 or more in USD or verified assets across supported chains like Ethereum, Solana, or Arbitrum. That's a big leap from the previous $50 threshold, which is likely a move to fend off Sybils attackers, those sneaky bots and multi-accounters trying to game the system for freebies. The game runs daily, weekly, and seasonal competitions, with the top 2,500 daily players splitting 1 million bulls. The game's reward currency. More prizes, like patron NFTs, are teased for Season 1, but Infinex is keeping those cards close to the chest. Now, let's talk about what Bullrun actually is. It's a crypto card game with a vibe somewhere between Pokemon TCG and Wall Street bets. Here's the deal. Bullrun lets you collect cards representing the top 30 cryptocurrencies by market cap. Think Bitcoin, Ethereum, maybe some meme coin that's inexplicably in the top ranks. Each day, You pick a 5-card hand from your collection and score points based on how those tokens perform in the market over a 24-hour period. Based on how Infinex treats this, it's like the Bull tokens will be airdropped to your Infinex account later. For our airdrop guide, Skatechain's throwing 1% of their Skate token supply at ex-yappers via Kaito leaderboard. Skatechain is promising 1% of their Skate token supply to the top yappers on their leaderboard over the next 6 months. Think of it as a crypto influencer pageant, where you get points for tweeting about projects. Here's how it works. You sign up on Kaito's platform, connect your X account, and start spamming, thoughtfully posting about Skatechain. Kaito's algorithm ranks your posts based on engagement, smart followers, and some secret sauce they call mindshare. The top 50 yappers each month split 0.167% of the Skate supply per 30-day epoch. Your payout depends on your mindshare percentage among the top 50. Simple math, but good luck out-tweeting the crypto bros with 100K followers. That's all the alpha I got today. This is PB, signing off.